Payroll management is a critical aspect of running any business. While regular payroll cycles are routine and predictable, there are occasions when employers must process payments outside of the normal schedule. These are referred to as ad hoc payroll runs. Additionally, once payroll is processed, employers have an obligation to remit required deductions, such as income tax, Canada Pension Plan, CPP, and employment insurance, contributions, to the appropriate government authorities. This guide explores the concept of ad hoc payroll runs and provides a detailed overview of how employers can pay their remittances, focusing on Canadian payroll practices. What is an ad hoc payroll run? Ad hoc payroll run refers to a payroll process that occurs outside of the regular, scheduled pay periods. Unlike standard payroll runs, which happen on a biweekly, semi-monthly, or monthly basis. What is an ad hoc payroll run? Ad hoc payroll run refers to a payroll process that occurs outside of the regular, scheduled pay periods. Unlike standard payroll runs, which happen on a biweekly, semi-monthly, or monthly basis, ad hoc payrolls are executed as needed, often triggered by special circumstances or unique situations. Common reasons for ad hoc payroll runs: missed payments. A regular payroll run may have accidentally omitted an employee or miscalculated their pay. An ad hoc run corrects this oversight without waiting for the next scheduled payroll. Employee termination or resignation. When an employee leaves the organization, labor standards often require payment of outstanding wages, vacation pay, and other entitlements promptly, necessitating an ad hoc payroll run. Bonuses and incentives. Performance bonuses, commissions, or other incentives may be awarded outside regular pay cycles and thus require separate processing. Retroactive pay adjustments. If salary changes or corrections are required retroactively, an ad hoc payroll run ensures employees are compensated correctly. One-time payments. Payments like honorariums, allowances, or reimbursements are often processed as ad hoc transactions. Error correction. Payroll errors discovered post-processing, such as incorrect deductions or overpayments, may be rectified via an ad hoc run. Personal requests. In rare cases, employees may request an advance or an off-cycle payment due to financial hardship. How ad hoc payroll runs differ from regular payroll. Ad hoc payroll runs are characterized by flexibility and specificity. Unlike regular payroll, which is scheduled and automated for all employees, ad hoc runs typically involve fewer individuals, specific payment types, and unique calculations. They may require manual intervention or special authorization and often have immediate deadlines. Steps involved in an ad hoc payroll run. The process for conducting an ad hoc payroll run generally involves several steps. Identify the need. Determine the reason for the extra payroll run, such as missed payment or special circumstance. Gather required information. Collect relevant employee details, payment amounts, and supporting documentation. Calculations. Ensure accurate calculation of gross pay, deductions, income tax, CPP, and net pay. Payroll system entry. Enter the details into your payroll system, specifying that it is an ad hoc or off-cycle payment. Authorization. Secure any required managerial or financial approvals for the payment. Processing. Run the payroll through the system. This typically generates direct deposits or checks and produces pay stubs. Documentation. Record the transaction in payroll records and maintain all supporting documentation for audit purposes. Remittance calculation. Calculate the required employer remittance for government deductions based on the ad hoc payroll. Employer remittance. What is it? Employer remittance refers to the process by which businesses send deducted taxes and contributions to government agencies. In Canada, employers must remit federal and provincial income tax withholdings, Canada Pension Plan, CPP, contributions, employment insurance, premiums, and sometimes other provincial deductions, such as Quebec Pension Plan if operating in Quebec. Why remittance is important? Remittances are a legal requirement. Failure to remit correct amounts on time can result in penalties, interest charges, and audits from the Canada Revenue Agency. Remittance ensures employees have their contributions credited correctly and supports the funding of public programs. How employers can pay their remittance. Employers have several options for remitting payroll deductions to the Canada Revenue Agency, CRA, and other authorities. The process depends on the employer's size, resources, and location. Online remittance. The Canada Revenue Agency, CRA, My Business Account. Employers can register for a CRA My Business Account to remit online. This system allows for direct payment, view of remittance history, and management of multiple payroll accounts. Electronic funds transfer, EFT, Larger organizations may use EFT to transfer funds directly from their bank to the Canada Revenue Agency. Online banking. Most Canadian banks offer a bill payment feature where businesses can select CRA payroll deductions as a payee and remit the amount electronically. Paper remittance. The Canada Revenue Agency provides personalized remittance vouchers, PD7A, for employers to mail payments by check or money order. The voucher ensures the payment is applied correctly. Pre-authorized debit, PAD. PAD allows employers to set up recurring or one-time payments directly from their bank accounts to the Canada Revenue Agency. This method is convenient for regular and ad hoc remittance. Third-party payroll providers. Many businesses outsource payroll to third-party providers such as ADP, Ceridian, Dayforce, and many others, which often handle remittance on the employer's behalf. These providers calculate, deduct, and remit all required amounts, reducing administrative burden. In person at financial institutions, some employers may choose to pay remittances at their bank branch using a remittance voucher and check. The bank forwards the payment to the Canada Revenue Agency. Remittance deadlines. Employers must remit payroll deductions by a specific date, depending on their remitter type, regular, quarterly, or accelerated. Deadlines are typically regular remitter, 15th day of the month following the month in which you paid your employees. Quarterly remitter, last day of the month following the calendar quarter. Accelerated remitter, threshold 1, remit twice monthly, by the 25th of the month and 10th of the next month. Accelerated remitter, threshold 2, remit within 3 working days after the payroll pay date. Ad hoc payroll runs may affect your remittance schedule if the run increases your monthly or quarterly payroll totals. Best practices for ad hoc payroll runs and remittance. Accuracy. Double-check calculations to avoid over or underpayment of employees and remittance errors. Documentation. Keep records of all ad hoc payroll transactions, including correspondence, calculations, and approvals. Timeliness. Process ad hoc runs and corresponding remittances promptly to avoid legal issues and maintain employee trust. Communication. Inform affected employees of the nature and timing of ad hoc payments. Compliance. Stay current with the Canada Revenue Agency rules and provincial legislation regarding payroll and remittance. Technology. Use payroll software or professional services to streamline ad hoc runs and remittance, reducing errors and administrative strain. Potential challenges and solutions. Ad hoc payroll runs can introduce complexity, especially when dealing with retroactive payments, multiple pay types, or termination scenarios. Employers may encounter challenges such as complex calculations, different tax rates, benefit deductions, and statutory pay requirements may apply to off-cycle payments. System limitations. Not all payroll systems handle ad hoc runs efficiently, manual intervention may be needed. System limitations. Not all payroll systems handle ad hoc runs efficiently, manual intervention may be needed. Remittance confusion. Unfamiliarity with remittance rules can lead to missed deadlines or incorrect payments. Cash flow management. Unplanned ad hoc payments can impact cash flow, especially for small businesses. Solutions. Invest in robust payroll software with ad hoc capabilities. Consult with a payroll professional for complex cases. Set reminders for remittance deadlines and automate payments where possible. Regularly review payroll practices and update them to remain compliant. Now you know, ad hoc payroll runs provide employers with the flexibility to address unique payment situations promptly and accurately. Coupled with a clear understanding of remittance procedures, businesses can ensure compliance, retain employee satisfaction, and avoid costly penalties. By implementing best practices, leveraging technology, and maintaining diligent records, Canadian employers can manage both regular and ad hoc payroll scenarios with confidence and efficiency. By implementing best practices, leveraging technology, and maintaining diligent records, Canadian employers can manage both regular and ad hoc payroll scenarios with confidence and efficiency. Contact us for your HR and payroll compliance audit and gap analysis, workforce planning and organizational structure review. Our specialists are ready to work with you in areas of compensation benchmarking and benefits strategy, DEI assessment and policy recommendations, change management and communication plan, payroll system review and technology integration consulting and customized risk mitigation and crisis management plan. Visit us online at www.center.ca. Thanks for watching. Merci de voir regard.